Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, volatility and volume lit up the Australian dollar on Friday as it fires up on all four cylinders after the soft US non-farm payrolls report for December. Along with that, less hawkish Fed talk fueled a sharp downturn for the US dollar as it plummets from 105.38 to 103.59 and settled at 103.64. Although headlines that the US job additions were above market expectations, wage growth was slightly below market estimates. According to the US Labor Department data, the non-farm payrolls report for December showed that 223,000 jobs were added to the economy versus a forecast of 200,000 and a high revised November print of 256,000. But the average hourly earnings only increased by 0.3% versus an expectation of 0.4%, and a revised November print from 0.6% down to 0.4%. In addition, shortly after the jobs report, the US released the ISM non-manufacturing PMI data, which contracted for the first time since May 2020. Investors will now be watching the closely US CPI data this week. Along with that, we also have the Australian CPI data. And to add, we've got Fed Powell also speaking. So looking at the technicals, the market is slightly stronger to the start of this week as it looks now towards the resistance of 69.10 as minor, and with the next level of 69.45. A break there would give further indication to the upside and confirm this engulfing candle and give an objective somewhere around the region of 70 to 71 cents. Before we get too excited, we do need to keep an eye on these technicals as they are a little bit to the weaker side, but however, building on a case that a break of 69.45 would ignite that rally and therefore expect to see further weakness in the US dollar. If we do see a break in the dollar index, which is currently the level that is of 103 figure 10, then that would trigger a move down to 101 and would initiate the next leg to the upside for the Australian dollar. Along with that, we also got an engulfing candle when it comes to the euro, and a break of 107.20 would give further scope to the upside and give a target somewhere around 109.45.60. However, 107 is the key support to the bullish case, and a strong rejection from there would be devastating for the bulls as the market may drop back towards the downside. But as I mentioned, keep an eye on the dollar index, as I feel anywhere from 103 figure 10 or figure 15, a close under there would give the next move up to the 109 region for the euro. The dollar yen took the challenge to the top side and was clearly rejected when it hit the region of 134.70.90. And from there, the market is weaker on the start of this week, and with all eyes looking back towards the support, which comes in around 131.45 or even back towards this key level where this hammer was posted at 130.40.60. It was a significant blow for the bulls from the rejection from that top side and therefore has put the bearish case and snapping this 3-day bullish trek. Sterling has also recovered and posted an engulfing candle that could see further scope to the upside. A break of 121.60 would give us a view to the region of 122 to 124. Do keep an eye on that level, as previously it did fail, but nevertheless the technicals have picked up slightly, and therefore a break of 121.60 should confirm the upside move. Long as the dollar is still, if it closes under 103, all these views should coincide and see the moves. Gold wraps up to a firmer case as it now takes the challenge onto 1,880.82. A break there would give further scope up towards 1,900 figure 12 as a potential target. I'm rather impressed with the fact that the market did rebound twice off the midway point, and the ADX is now trending to the bull case that does support the upside, and see if we can get a break of 82. As a possible flag that's posted here could see the market actually fail to any challenge with the resistance capped around 76.20.30, we could see another down test. That is towards the region of $71 and reassess from there. Well, that wraps it for the start of this week. Thank you very much for joining me. As always, look out for the intraday report and hope you enjoy the great start to the day.